Hello everybody, I'm Jed Hardman with Independent Home Loans. Wanted to get started on a training here on HECM mortgages, home equity conversion mortgages. We've had a large amount of people that want to get these lately. Let me get into first just who I am and where I'm from. I grew up in Heber City, Utah, really close to Park City, Utah, ski resort area. Born, raised, and bred around Utah. Been here my whole life. Showing you a picture here just of these are my kids and my lovely wife, Kelly, Beverly, and my wife Lauren. And this is us around Christmas mostly, it feels like, these pictures. Making my daughter work right here, Beverly, and get the snow removed, and just some other cool things. That's what we do around here with kids in the winter, is remove snow or go sledding. So anyway, that's a little bit about me and where I'm from. Myself, I mostly enjoy dirt biking, a little bit of fly fishing, some snowmobiling, and yeah, I mean, I could get into a lot of other stuff, I guess, that I do enjoy doing. Let me jump into the slides here and let's go over what the HECM mortgage is. Home equity conversion mortgages, and I'm just going to try not to just read this all the way through, but some of it I will just read because it's, I think you'll be able to follow along and understand it. A little bit more about me. I've been doing mortgage for 22 years, and we survived the crash. It's crazy. We're way on the other side of the crash in my mortgage career. It's really been, 14, 15 years since the crash was really in our face. We've seen home equities just skyrocket really the last 7 or 8 years, but even then, after the crash, we've seen home values start to go up again, and that's what much of the home equity conversion mortgages are about. As we started to do some home equity, I'm just going to call them HECMs. So we started to do some HECMs this last 2 years. We've noticed a lot of people that need them, and we've said, okay, if people need these, then we need to start talking to people about them and going over this with them. So first and foremost, the people we're seeing that need the HECM are the seniors that they retired. Hey, I have $4,000, $5,000 a month to retire. I have an $800 payment, something like that, on my mortgage, and inflation has really got me. So we've noticed a lot of people reaching out for these and a lot of people needing these. So let's just jump into this. It is more important today than ever for seniors to take advantage of their home equity conversion mortgage. Again, a HECM, also called a reverse mortgage. HECMs allow people to, over the age of 62 in every state, 55 in some states, and with some programs, to increase their cash flows by paying off their existing mortgages without the requirement of making continued future monthly payments out of their monthly income each month. So you're getting rid of if you have a mortgage, let's say you have a mortgage with $800 payment or $1,000 payment, you would get rid of your mortgage payment permanently. It'd be gone for good. And then it also allows you to pull some of the money out. And there's also you can get a line of credit with it, and we will go over that later. You will still own the home. That's a misconception. A lot of people think that they are giving ownership over to the bank, and that basically they are going, well, you take it over and I don't pay a payment anymore, but it's your house. That is not the way it works at all. See here, you need to continue to pay the property taxes and the homeowners insurance, and of course the home will still go to your heirs, or however you have it in your will, or whoever you deed it to, or however that works. You will need to have this as your primary residence. And your heirs can never owe more on the mortgage than the home is worth. So you're not going to hand over something that is bad at the end either way, whether that's you move away, you sell, you pass away, whatever that is. HECM loans are regulated by HUD, FHA. They are extremely safe and secure, and they're extremely scrutinized. So you are in very good hands with getting a HECM loan. Next slide, you can access your money or equity in a few manners. A lump sum, you are usually limited to about 60% of the funds that year. Line of credit that can grow forever. I'm going to get a little bit more into the line of credit stuff here in a moment. Monthly income or for a certain amount of time or throughout your life. Okay, so if you own your house outright and you need a certain amount of money, there's a chance that there's an option to get that as well, just to have more money coming in. Qualifications are based on your age, the home value, and of course the interest rates. Also, your credit can affect your home equity conversion mortgage. They're not very credit sensitive. There is no minimum credit score. Okay. Let me jump back to the line of credit for a moment. So, if you get a home equity, kind of like a credit card, maybe be the better way to put this is, if you have a credit card, obviously you're not paying any interest on anything that you don't spend. That's the same thing with the line of credit you can get with a HECM. They can give you a line of credit. Let's say the line of credit is $20,000. None of that money is rolled, or that interest is rolled onto the property or onto the value or onto the mortgage until you spend money on it. Okay, so if you ran into an emergency and needed some money, you could use your line of credit and you could use that money. That does not mean you have a payment on it though. I know that's something a lot of people believe, is they go, okay, well, I'm gonna have a payment, it's a line of credit. No, the payment will still not have a payment. There won't be a payment, but there's no balance there for interest to be rolled onto, because every month there's a certain amount of money that's rolled onto your mortgage. It is a negative amortization mortgage. Okay, let me see here. Loan to value is a giant factor in any mortgage, but it's even a bigger factor on a HECM mortgage. So it's not just driven on, okay, I have 80% loan to value or 50% loan to value. It's much more driven on basically this, like your life expectancy, your date of birth, that type of stuff. There's a little bit more that goes into it for sure. You go to the next slide. Couple reverse mortgage notes, and some of this will be a little bit said twice, I guess you'd say, throughout this presentation, but I think it helps people. Is reverse mortgages help seniors that are tight in their budget stay in their home and increase their cash flow. Seniors can use reverse mortgages to stay in their home, eliminate current mortgage payments, and even purchase another home. Okay. Seniors can use a reverse mortgage proceeds to pay health care, prescriptions. They can even use it to travel, really just go to lunch with their friends, just make life a little easier, take off the edge. The ones that we've done here at this company, the ones I've done, they have tremendously helped people. And we're going to go into a few examples here in a moment. Next slide. Home values increasing over the past 5 to 7 years have given seniors an extra padding who have already had a reverse mortgage. So a lot of people believe, okay, my house is worth 400 grand, I owe 50 grand on it, I get a reverse mortgage, and then they get thinking that, you know, I'm adding some money onto this a year, and now I'm getting really worried about it. They don't realize that home values, not that they will always increase, because they don't always increase in every area and everywhere, but home values will increase over a large amount of time, or they have traditionally, and that's good for people that have a home equity conversion mortgage. Most seniors, their home is their biggest asset. Real estate, even owner-occupied real estate, has always been a great security for seniors. Seniors are always wise to hold on to their real estate and not to sell it. I've experienced that much as I've invested some of my invested money, quite a bit of money over the years into real estate. I own more than one rental. I own quite a few, and it's a very secure place that hedges really well against inflation. And it's also, you could rent it or a lot of other things, rent it out and make money, or you could just sell it when it goes up with the balance, or goes up in value, excuse me. So very, very good thing to hold on to, and not just to sell it to live off of, but to actually get to live off of the mortgage or the home. Most reverse mortgages are primarily used to ease up living expenses and cash out, pay off large debts. Let me just go over a couple of bullet points. It helps clients not to take out money in a down market. Okay, a lot of people, things will get tight, the market is down, and they will rip some money out of their 401k or their IRA, really when they probably shouldn't have. It provides an extra source of income. It provides health care. They can pay health care with it. They can pay prescriptions with it. Large lump sum of money to pay credit card debts and other interest loans, or maybe even high interest loans. What many people, when they get this, they'll get a lump sum of money of like $80,000 out. I'm going to go over this example here in a moment of a lady we helped, and that's what she did. She paid off everything, and then, being 80 years old-ish, she was able to, live a little cheaper because now she didn't have any bills anymore, or not bills, but any debts. You could purchase your final home with a mortgage and then have no mortgage payment. Like, you put a large lump sum of money down and then you don't have a payment after that. It's a great place for a safety net or a nest egg, whichever one you want to call it. Emergencies do come up, and it's nice to either have that money available or the line of credit we spoke about a little earlier. Let me jump to the next slide. This is a story of a lady here, just right here in Utah County, Utah. Her name was Sherry, very nice lady. I was talking to a friend of mine that she works in the medical field down in Utah County, and she said, I have a friend that's working with me, and she's 79. I think she's 80 this year, so 79 years old last year when we did this. She owed $180,000 on her house. Okay, the home payment was about $1,350. It was like $1,353 or something. She was still working as a CNA. She had about $8,000 in credit card debt, had a payment of about $220, $230 a month, really not making any headway paying that down with credit cards, really just paying the minimum payment. And a lot of that debt came from medication, just the cost of living, whatever. She had to throw it on a credit card once in a while. She was living month to month, wanted to desperately quit her job. She came to my office, she kind of hobbled up the stairs up here, and yeah, she's 80. She was like, I'm old. I don't want to be working every day. I want to relax. And if this is a way to do it, I'm going to do it. And she wanted to take some trips to see her family out east, and she wanted to enjoy life a little more, like we all do. So she was making about $2,200 a month in Social Security and a small annuity that she had. And this is what we're able to do for her. The results of her getting a second mortgage, or the reverse mortgage, paid off her $180,000 mortgage. She saved her $1,350. She saved $1,350 a month in her payment. She was able to retire from working after getting the reverse mortgage completed. Paid off her credit card debt, saving her $220 a month. No longer stressed living month to month. Able to travel due to her not working anymore, of course. She had some time on her hands. She walked with $88,900 in cash into her bank account. And she has, I think, an $11,000 line of credit, like we went over earlier, that she could spend on that as too, a little bit of money there. So basically she had $100,000, and she's living stress-free. Also, just a note here, she did not get a second mortgage. This thing up top here, it is I've got a typo in this, but it is actually she got her HECM mortgage instead of getting a second mortgage that she wanted. So I need to go correct that. Here's a little bit. This is actually a snippet from hers. I asked her for permission of this. Obviously, we don't have her information in here anyway, but Sherry started at $189,000 with her reverse mortgage, okay, after we paid off everything, and then 10-year and added some closing fees, things like that on like any other mortgage. 10 years from now, she will be 90 or 89. She will only owe about $554,000 on her home. It will be projected to be worth $880,000. So there's still a lot of money to go to her heirs, about the same as it would have been. So it's not a thing where it's going to kill her family's chances to move on with the money. And hey, she worked for the money. She deserves it. She deserves to move on with it. But this gives you, I think it's going to have my picture here, but it gives you a pretty big, when she gets into her gets older, 100 years old, that type of thing, it shows where the loan balance could be without her refinancing or doing anything or moving into a retirement home, that type of stuff. She's going to be well taken care of when she gets in her 90s. There's still going to be value in the house enough that when whoever gets the home is going to still be walking us some money, and it's going to be a very good thing for her not to live just a better life. Here, this kind of goes into the reverse mortgage lines of credit. Many reverse mortgages have an option for a line of credit. The line of credit is a great option because you are not accruing interest on the line of credit. Like we said earlier, like a credit card, you don't charge anything on it. You're not rolling interest on it. Again, there's still no payment on this. It's just there won't be anything rolled onto the loan. The line of credit can grow as the value of the home grows. The line of credit grows, so you could still spend some money on that too. That's a great option to have. This does grow with the value and with the CMT Treasury. And then also, this is a great option to have. Most of the ones that we're running these days, the home equity lines, the HECMs themselves, the reverse mortgages, most of them are able to get a line of credit of some type of money, and I think it's just a great option to have, especially just for emergencies. I'm Jed Hardman. I'm with Independent Home Loans. I'd love to help you look into getting your reverse mortgage or your HECM looked at. The biggest misnomers is people think that obviously this is going right to the bank's going to own the house. It doesn't. You will still own your house. Okay. This is my information here. I can be reached at 801-602-4071, jed@independenthomeloans.com. Shoot me an email, give me a call. Again, I know that a lot of people are not very familiar with this product, but it has been a great product. It is backed up by the HUD, FHA. It's a very good deal. So give me a call. I really appreciate your time, and look forward to you guys giving me some thumbs up so we can and likes, whatever, so we can go ahead and send this out to the interwebs and get some people looking at this as well, to the algorithms. Thank you so much.